Hi, hello, namaste everyone. This is Kunal Bothra, and today we have a very interesting topic, something which is, I'm sure, affecting all the market participants of where are the global markets headed. So today's topic is basically on the effect of all of those external data points. So what I've done is, I've discussed specifically the charts for major US indices. I have not discussed the external factors. We all know what's happening across the globe. We all know that the dollar index is at a multi-year high. The Japanese yen is at a multi-year low or high, whichever way you want to look at it. The bond yields, what's happening over there. The crude oil prices back about the $100 Brent crude specifically, and all of those data points. But then the question or the moot point for all of these external factors is how is it going to affect our markets, and specifically the US markets in this case. And of course, US being the mother market has a direct effect on what's happening across the globe as well. So today's topic is on the US market conundrum. What I've done is, what are the charts for major of the global indices, which is which are getting depicted. And before we start off, I would request everyone that if you're logging for the first time, ensure that you do like, subscribe, and don't forget to share as well as leave a comment on the video. All your feedbacks, positive, negative, would help us evolve much further. And I can be, and I can at least promise that I'll be more consistent with YouTube as well in terms of sharing a lot of these interesting chart outlooks. So without much ado, I'll discuss on what's actually shaping up across the global markets. And there are some very interesting and different sort of chart perspectives which I would showcase in this video. Okay, so the first chart we all know is on the major market, the major equity market, which is the Dow Jones Industrial Average. Now, what I've mapped up is the last 5 years, 4.5, 5 years of the chart patterns for the US indices. And I would say that the turning point for the markets, we all know, has been the 2020 correction. Now, we all know that what happened, at the start of the first major reaction for our market, for the US markets, as well as for many of the global markets on the onset of the pandemic. And we know that what shaped up in terms of the correction, as we can see that even the Dow Jones at that point corrected from 29,500, which was approximately the high at that time, and fell very sharply towards, I think, 18,500, 600, which was the lows for the Dow Jones. But then what shaped up, and what I've mapped up in this chart is the retracement, or the retracement of the fall which had happened. So it's a simple tool which I've used, the Fibonacci retracement tool. And as you can see, I've just taken the starting point from the 2020 highs till the correction of the pandemic. This is the monthly charts for the Dow Jones Industrials. And then the number which actually intrigues me is the 161.8% retracement, if I can call it so. And where the retracement ended, it ended exactly at that 36,700, 800 mark for the Dow Jones, and that coincided with the 161.8% retracement. Now we all know, I mean, I'm sure many of you guys who are using technical analysis as part of your core study or core understanding of price trends, you know the impact and importance of Fibonacci numbers, and why the 61.8% retracement, the 161.8% retracement or projections are very important. So this gives you a perspective that the 161.8% retracement mark was the major resistance hurdle for the Dow Jones, and it failed to cross over it and sort of trade above those levels convincingly for quite some time. And now we've seen that from those levels, the Dow Jones has started to correct. Now, why is this so relevant? Why is this so important? We all know that this is history. This is something which has gone by. Has there been such other instance on the Dow Jones historically which has played out? That's the key. So what I've mapped up is not just not far long, not like 50 years or 100 years back. I've looked at the last 10 years and 12 years of charts, and there is a very interesting like to like, I would say, similarity in terms of this 161.8% retracement, which I'm showing it to you in the next chart. Now, this is the charts on the Dow Jones from 2000 to 2008-9 correction. if you look at the first part of the correction, which was from 2000 to 2002, 2003, where the Dow Jones corrected at that point, we've done a very simple analysis, used the highs and the lows over here, and then tried to map up and look at the retracement mark. As you can see, this also coincided with the 161.8% retracement of the 1 year, 2 year correction for the US indices. What happened later is something which is very, very, very interesting. And that's why, again, this is not a suggestion. This is not an indication of what is likely to happen, but this is an indication of the importance of this major resistance of 161.8% retracement. So what transpired, we all know what happened in 2007, 2008. It was a very sharp correction. I think just about some 7 months, or this is the quarterly chart. In fact, so 4-5 quarters of very sharp correction. And you saw major global markets correcting by 30%, 40%, some of them even much more than that as well. And look at the correction which happened in 2007-8, the 161.8% correction, it landed back the US indices at exactly the point of correction in 2002. So again, you can use your wild thoughts and imaginations of why this resistance in US markets is so very important and critical. Let's look at the next chart. Now, the next chart is on the NASDAQ composite index. Now, we all know that NASDAQ is a completely tech-heavy index. We all know that how NASDAQ has performed in the last 1.5 to 2 years. There have been so many number of the so-called IT stocks which have become like a fad and a phenomena in this market. But then the price outlook for the NASDAQ is something which is very intriguing. Now, this is what I call as a very intriguing chart, because then it kept, it keeps everyone on the edge or on tenterhooks, at least for this month itself. So there are two parts to this chart. On the top grid, you can see the prices, and on the bottom grid, you can see the RSI. Now, what I've done is that use the very simplest of the RSI tool, and then looked at the historical points that whenever the RSI has come back towards a certain support level. So just like prices, even the indicators have a certain set of memory in themselves, and which is why you have to understand the relative importance of the previous levels on such indicators, and it helps you give a sense of what the prices can or cannot do at that particular point. So the important trend line which I've marked over here, it's not an absolute trend line. It's not like a number of 30, 40, 50, 60, but I've just joined the recent or the major lows for the RSI. And it actually gives a very important reference point, because you can see that whenever the prices have coincided or the RSI has coincided at this support trend line, the prices have also exactly managed to coincide at that rising trend line. So whether you start off from prices and get into the RSI, or whether you start from RSI and then get to the prices, the back and forth analysis is up to you. But then the chart perspective for both the prices as well as RSI is exactly mirror image. But then the difference and where we are right now is the more intriguing part. So as you can see that the sixth test of this RSI, we are already below the major support trend line, which means this is the monthly chart. So which means at the start of this month of May, we are already showing signs that this could be a chance of reversal. Now, remember, the prices have not come back towards the previous support trend line. There is still a margin of, I think, 2000 points or roughly 2000 points approximately on the NASDAQ. So the trend line coincides almost at 10,000 on the prices. So it could be 10,000, 10,500, depending on when the prices touch, whether it's this month, next month, or so on. And the NASDAQ is almost at 12,800 levels currently. So which means there is a gap of approximately 2,000, 2,500 points, which is still there. But the RSI has already given a hint so far this month. So this is a very, very important chart. You have to keep this in your mind of how the indicators are already showing you a sort of an advanced signal. Now, the importance, why I would say that the importance of the signal is it's a monthly signal. We are just at the start of the month of May. So you have to see the second half, because if there is any recovery in the second half of the month of May, then the RSI would come back above the trend line. So remember this very important point. Don't make your decisions as of now. These are very strong charts. These are long-term charts which I'm showcasing. So I'm not showcasing the last 3 months or 5 months of chart patterns. This is the charts for NASDAQ from 2008 2009. So you can imagine the extent of the repercussions of this trend line, both on RSI as well as on the prices. It's almost like a 14-year trend line which I'm showcasing. So don't judge this by in just the next 14 hours or so. Let this price and trend line on RSI show you a confirmation. That would be the first most important signal on the global markets. Let's look at the third important index. Now we generally talk of the discussion on the US indices is restricted towards S&P 500. Then you look at NASDAQ and Dow Jones industrials. But there are two other indices which are also very, very important to understand from a US market perspective. And the first, rather one of them, is the Dow Jones Transportation Index. Now I'll leave the homework to you. You can do your homework and understand that there's been a very strong correlation between the Dow Jones transportation movement as well as the Dow Jones industrials move. We generally track DJIA, which is the industrials, but we rarely track DJTA, which is the transportation average. But if guys who are using some global softwares, you can look at the charts for the Dow Jones transportation. But I'll straight away get to the analysis part. Now, what I've mapped up is the very simplest of the indicators, that's the RSI, and used a particular, I would say, a threshold line, which gives me a perspective of that above a threshold line is where the averages or the asset class trades in a positive trend, and below the threshold line. So, for example, if it's above water, above the water level, then we say that it's free to move up on the upside. But if it's below water level, is where we start to get a bit more cautious. So I've marked this into zones of red and green. So as you can see on the RSI, I've marked zones of A, B, and C. These are the 3 points in the last 10 years where the RSI has come below the threshold line. Now, whenever that has happened, so as you can see on the grid table over here, that the 3 month, 6 month, 9 month, and 1 year performance for the Dow Jones transportation average is negative. So whenever the breakdown happens for the RSI, it has an effect for not just 3 months. Of course, the first 3 months is more sharper, but then the 6 month, 9 month, and 1 year effect is also quite steep. You look at the point number B, which is point number which is this point over here, and as we can see, again, very, very similar effect, that whenever the Dow Jones transportation average has broken this major RSI threshold line, it's given returns which is on the negative side, and not just, again, I would reiterate, not just for a point of just about few weeks, but for a period of 3, 6, 9 months and 1 year. It takes almost 9 months to 1 year for the transportation average index to move above the threshold line. Point number C is also very similar. As you can see, the charts over here, this was in 2019, and we all know what happened in 2019 and 2020. There was a sharp correction in just a matter of 1 year, from 2019 to 2020. Now, the reasons can be, we all know the reasons of the correction between in 2020, but that's not the point. The point is that the prices are inherently weak below the threshold line. The biggest concern for our markets is we are so this is the point over here, and the RSI is now back below the threshold line. This is the first, or in fact, this is the second month where the RSI is trading below the threshold line. So the Dow Jones Transportation Index is already showing us some signals of concern, something which could have an effect, as I said, not just for the next 2 months, 2 weeks, 3 weeks, or not just for the next 1 month, 2 months, but this could be a period of concern for maybe the next 3 months to the next 12 months for the transportation average. And this is why it becomes a very, very important and a very subtle kind of an understanding. So, from the indicator itself of what the prices are actually showing or indicating. And then we move on to the last chart, which is the Russell 2000 index. We all know the composition of Russell 2000 index, that how it indicates the major breadth of the US indices. And we've seen that how the Russell 2000 index is actually showing signs of a bearish RSI divergence. So the index has actually made a high relative to 2019 on the prices, but the RSIs have failed to do it. The last confirmation was in 99 2000. Now again, I'm not trying to spook all of you guys over here, but you can understand. So the idea with this observation and with this video was to give you a first hand feeling of what's actually happening to the prices. You know, there has been so many times when we try and lay more emphasis on the external factors like maybe crude, dollar index, yen, and bond yields, and so on and so forth, inflation, stagflation, etc., etc. But you know, we spend almost 80%, 90% of the time analyzing the external part. Those external conditions are something which will keep on changing and evolving rapidly. But the effect on the prices for the major asset classes, that's the most important analysis. And this is what I've tried to cover in this video. So I'm sure you guys, like the part of this video. Again, the moot point of this entire observation is it makes the month of May 2022, where we are right now, extremely, extremely crucial. If we manage to survive this correction, just as I showed on the RSI trend line, threshold line, and if we manage to come back above, hopefully by the end of the month of May, then things prospect could look very, very positive for the global markets. But if we happen to close below this threshold line, then you know that what the extent of pain could be for the global markets, and specifically for the US indices. So the question which I will leave all of you is whether you sell in May and stay away, or whether there is a sale which is going on in the month of May and you buy anyway. I hope you guys liked the video. Don't forget to like, share, subscribe, and please don't forget to leave your comment as well. See you in the next video. And in the next video, what I'll try and do is analyze the sector rotation moves for the Indian market, so that can help you maybe analyze and then understand the flow of sectors which is going on across the Indian markets. Thank you so much, guys.